Simo, thank you so much for doing this, for taking time off your busy schedule for doing this. You're building a startup, InvestBoard, in one of the world's fastest growing industries in the world, which is the fintech industry. And there's just so much I want to talk to you about. I mean, for the people listening, fintech, InvestBoard is a company that it's a tech company, it's a tech platform that helps investors make better and smarter decisions. And InvestBoard as a whole array of tools powered by AI and machine learning that will help investors basically make better decisions. And that's something that I want to talk with you about later on, Simon. But before that, the fintech industry is something that I find very interesting. And as someone that's on the outside, I look at it kind of as the food industry. Here's what I mean by that. When we eat, let's say you go to the groceries and you buy an apple, you don't really know. You take the apple and you take it home with you, but you don't know what happened in the back scene. Where did the apple come from? And what is the process in which it traveled to go from the tree to your supermarket and to your shelf? So people don't think about that. They just see the apple. And I think it's the same thing with finance. When you swipe your credit card, people don't really think about the back end. What is it that's happening? What are the different layers? Who are the different people that are involved in this transaction of you swiping your Visa card at a machine or you doing an online transaction? So I think that I have a lot of questions and I'd love to get some clarity with you.
Sure,
So before we get
please shoot out. Well,
yeah. So before we get started, what is it about the fintech industry that you find the most interesting?
well, speaking of us, what we from our history and what we're looking at, of course, what we think is more interesting is investment, where we are addressing this segment of the market, and this is where we think there's a lot of things to do, especially by helping people better invest their money and better invest their savings, to be able to manage their overall project of their life. So this is what we're tackling. This is what we think there's a lot of things to do. But as you mentioned, fintech is a very, very big segment of the overall industry. You get payments, as you mentioned. You get insurance, as we can mention as well. You have all the fraud business behind all this money payment and so on and so forth. It's a very huge market with billions and billions of money exchanges every day. And so we can look at different aspects, but the banking industry and financial industry has a lot, let's say, greatly involved in a couple of years. It started a lot with payments, with people like PayPal at the beginning, then Square, now it's Stripes, being able to help the B mainly, being able to pay more easily on the internet and be able to, let's say, dynamize this internet business and digital business in the end, but connecting back to the real world, and the real world is also money, and even so, it's digital money as a money sitting into your bank. But this overall infrastructure gives the industry and the economy the capacity to grow, and especially in the digital space. So as I mentioned, fintech is a big aspect of what we see in the digital world since a couple of years, because it's at the essence of e-commerce and other features that have been grown very rapidly. On the back of this, you get all the AML, KYC, and let's say security environment around the payment space that grows as well. And then you get also the insurtech business, which is totally different. It's the possibility to give insurance to the end customer or to professionals. And what they're offering there is a digital way to be able to get insured, to get straightforward, have a better user interface, have better metrics in terms of what you can offer to the end user. And so there's different space, as we mentioned. The one we're more specialized on is the investment part, which we can cover maybe afterwards when we can go into the deep of the specific segments of the fintech market.
So fintech overall it has to do with it's the technology that powers the movement of money. Is that a good definition?
Yeah, for the payment parts, yeah, mainly.
Okay. I read an interesting study actually right before this podcast, and There was a study conducted this year actually by a European research company called Dever Group. And they found that last year, because of COVID, there was an increase of 72% in the use of fintech technology and applications and consumers in Europe specifically. Is that something you, being in the industry, is that something you've personally experienced? Did you see like your numbers jump? Did you see like all of a sudden people that were in the industry, all of a sudden their market share grew? What was your experience being in there?
Well, let's say it's mainly from one point of view due to the situation we're living in currently, where all the in situ business, when you go to your banking branch, or you do to your insurance company, or you make your payments to your retailer, isn't that possible anymore. Well, it's very much reduced. So all the digital business behind of those existing industries has grown up very rapidly, and also, as you mentioned, almost exponentially. So you don't go to bank office now, you just do it on your phone. You don't need to go to the retailer, just do your shops on Amazon or whatever e-commerce platform and get delivered to your door. It could be groceries, can be tech or the type of products. And every back of them, there's some fintech behind, because if you go to Amazon to make your shopping or whatever your e-retailer you use, you need to be able to pay by card, and this card will be most of the time powered by a fintech company in the payment space. If you want to do your banking business with your bank, then you're probably using the application of the bank, the digital application of the bank that sits on your phone. And on the back of this, there's some fintechs doing the job for the bank. So you don't see it, but the bank is using some technology from other providers to be able to deliver this to your clients, to their clients. So for instance, in France, you get the aggregation business, or what you can see, all the accounts you have within other banks in one app. So you can be the pilot of your savings or your wealth, or even your check account within one application that could be provided by a bank, but actually it's a fintech doing the job behind the aggregation part. So given the situation and given what the digital industry is taking the ground within the market, of course, fintech is becoming more and more essential to the existing players, but also becoming new players in some part of the industry.
So why should consumers like me care about this industry? At the end of the day, people like me who are not really in the tech space, we only want to live better lives, in the sense where we want to live more convenient lives, easier lives, faster transaction. If you're talking about money, we just want to have better lives. So how is fintech making people's lives better, in a sense?
Sure. Well, let's talk about in general, and then can go into investments. Okay. In general, you want to be able to use your money and whatever you want to do with it very easily. And the way to do this is making things something complicated simple is the hardest way to do. And this is where technology helps mainly. This is what we as technology provider, we can help in general. So for you is being able to do a transfer from your bank account without calling a bank. It seems very obvious now because we are used to that, but a couple of years ago it wasn't possible. So this is like very convenient stuff that you need to be able to do, and that fintech can help you do so. For instance, if you want to send money abroad, if you go to your traditional bank, it will cost you money. You can now do it online, but if you use a special fintech to do so, the fees will be probably less smaller in terms of exchange fee, in terms of transfer fee, and so on and so on. So it gives you, as a user and as a consumer, the capacity to make your business quite easily with very low, with a seamless experience, and generally with a lesser cost. On the investment parts, it's not an area that has been so much democratized, especially on the area we're looking at. If you want to look at people such as Robinhood, Wealthsimple in Canada, or those other type of players, which are very interesting for the end customer.
I'm on Wealthsimple.
Okay, then I've met the CEO a couple of years ago, so that's why I know them. And so they're offering a very simple way to interact with your wealth and be able to buy stocks and to be able to invest very easily on the stock market. So this is something that's being able to put in place and gives you Leon the possibility to do some speculative trade or even investments on the more longer term with a simple app without going through your bank. What we're doing, we're covering, let's say, not the B2C space, we're more covering the B2B2C space. Those, for instance, if you go to your local bank, let's say Desjardins or whoever you're serving in general, or BMO maybe, you're going to go to your banker and you want to open an investment account because you want to save for your children, you want to save to buy yourself a house or whatever project you want to put in place. So in Canada, if I'm correct, you're probably going to open a TSF A account because it's
TFSA, yeah.
financially TFSA, sorry, because it's fiscally say optimized. But your banker needs to be able to explain you which are the products you need to buy and how you need to buy, what are the risks behind every products you need to invest in, and so on and so forth. And here we are going into this market by giving the possibility to your banker to better advise you on which investment he needs to do. So here we're talking mainly about funds, mutual funds, which are the biggest investment vehicle used in the savings space in the world. It's roughly $80 trillion on the overall market. And the problem with this product is that it's not something very understandable. It's not very transparent for you. And it's not even transparent for the one who is selling it to you because he can't know every funds in the market. There's more than 100,000 only uniquely in Europe. So you can add Canada, you can add the US. So it's a very difficult product to be able to explain to an end user such as you. So the idea is to be able to give him a digital tool where he can easily explain to you what are the objective of the product that you're buying, so the fund, what are the risks behind, and not only a risk from the 5 year in the past, but as well risk in scenario. So if you, Leon, you have a specific scenario from the industry of the economy, you want to test it with your advisor, then you can do it. And you can see how your fund or your portfolio of funds will behave within this given scenario. On the contrary, if you don't have a scenario yourself, but you would like the bank to be able to show you different scenario cases to see how your investments will come in the future, then you can do exactly the same thing, and your advisor can help you decide in which fund or in which portfolio fund you need to invest to be able to fulfill your goal on a given basis of time horizon, for instance.
So I guess this is where InvestBoard comes in. This is where you use your technology to help people in that space. So tell us, what exactly is InvestBoard, and how does it basically help make the world a better place? And if you want to take a really broad view of things.
Sure, of course. So as mentioned, we work on the B2B and B2B2C space. So we don't address direct customers as of today. We think it's too difficult, especially in Europe and where we are based, where the financial education is less developed than in North America. So maybe we'll come to that in some point, but it's not the case today. So we help the people investing in funds or distributing funds better address the risk of these given products to do two things: increase the yield curve for them and their customer, so giving more yield to them, and secondly, be able to help them understand how the product behaves, why it behaves in this way. Is it a good product or not good product? And when I'm talking about a product, I'm talking about a fund. And how can I help my customer decide which fund or portfolio fund I want to buy? And we're doing this with several technological features. First of all, is the data. So we provide data to our customer on roughly 150,000 funds distributed in Europe and Asia. And so this sounds maybe easy, but it's not. Even so, it's public data. You need to aggregate this data to give it sense, to build aggregated fact sheets, to be able to show data in a way that everyone is able to understand it. And then we make all the risk calculation needed to able to understand the fund. In terms of
Uh,
risk calculation, it's performance, first of all, but it could also be the volatility of the fund. So let's say how fast the fund moves if an event goes in or goes out. So the sensibility of the fund and other, of course, financial metrics that are more for savvy investors. And after that, we give the possibility to the user to build scenarios, as I mentioned just before. If you want to test a specific scenario in the market, you can test it, see what's the result for the funds you want to buy or the portfolio model you want to buy or distribute potentially, and help you in your day-to-day decision on your investments. So it's for new portfolios or new funds. It's also for existing portfolios. Like for instance, I'll take again the example of you, Jan. So let's say you went to BMO, whoever your bank is, or One Simple. You bought a fund or a portfolio fund, and because the advice that was given to you was a good one, and you trusted the man who gave you this advice, with the technology aspect that he's being able to show you behind. But giving 3 months behind, you want to see, okay, now the situation has changed. My biggest risk is maybe not COVID, it's maybe now inflation, because countries have put more and more money into the banking system. So what if we are in a overinflation scenario? What's the consequences for my savings and what the consequences are for my wealth? And
okay.
so you want to see how it goes, and you can do your scenarios and then redo your investment allocation and change the funds you have been invested in to other ones, and so on and so forth.
Okay, that's super interesting, and I guess for the people that are listening, it might sound confusing, but for me, it makes sense because I was lucky to get a tour of the platform by Alex, your colleague, and I'm basically able to visualize. So in a nutshell, what InvestBoard does is that you aggregate data, tons of data, terabytes of data on the internet that are publicly available. You filter them and you're able to in a sense import them on a platform where it would be easily where it would easily allow investors that are on your platform to easily understand and simulate different situations. Is that correct?
Yeah, exactly. That's exactly correct. And then we make the calculation, as you mentioned, to be able to run the scenarios behind.
That's something interesting, and that's something that could be interesting to talk about. Is that you have different scenarios that you have on the platform, you can simulate, for example, the Black Plague or the 9/11, or the 2008 real estate bubble or 2001 internet crash. How were you able to simulate those past events and apply them on real life circumstances?
Sure. So, for instance, as you mentioned, Black Monday in 1987, where there's a crash on the market due to several algorithm trading behind. What we do is most of the funds that we have on the base haven't went into this crisis. But we know how a fund behaves in certain type of market events. How we do this is that every week we look into the markets, and even so there's not a big crisis from several months, there could be several events where the market goes and behaves as it was in a crisis mode. And so giving those different data points that we collect every week on the fund versus the market, we're able to determine what we call the DNA of the fund, and so determine the sensibility of a fund given other factors of a financial crisis in this case. And so afterwards, what we do is that we know how the 97 Black Monday crisis went, what were the factors in terms of mathematics, how it behaved, and so we can project the performance of the fund that never went through this crisis into this one. So it gives the possibility to the user to see how it went, but purely on the mathematic model. we're not doing prediction. We're just doing math and basically a regression on the factor we're analyzing from a given product or a given fund to a specific market events. So it could be a crisis, as mentioned, but it can also be a bullish market, like
Right.
the one we saw in the internet bubble. So that's the beauty of technology, is that you can be able to see what something hasn't been experiencing in the past.
That's so interesting. So I'm assuming at InvestBoard, you have more software engineers and you have more mathematicians working with you than you have economists or financial advisors.
Yeah. We are purely a tech platform. We don't do advice or we don't predict the economy, how it will behave, but we give the tool to our user to be able to do so. So if an economist thinks that we can be in an inflation market, like the one we saw with the Mexican debt crisis in '94, then he can do the scenario on his portfolio, on his fund, to see how it would behave if the same scenario would occur in 2022, for instance.
Okay. What are some of the most advanced, I'm gonna say, technologies that power your platform? Do you have like an AI algorithm behind InvestBoard? Is there like scrapes the data of the internet?
Sure. So we get several technological features. All these features are done internally. So as you mentioned, we scrap a lot of data, and we have a whole process to make sure that the data we scrap is a quality data, because if we don't, shit goes in, shit goes out. Sorry, my French,
Yeah.
but it's essential. And so for that, we use NLP technology to be able to scrap the data and then to determine if the data we use is positive and we need to structure it afterwards in our database. So that's the first point. We have
Can you
big
talk
data
about
technology
the
behind.
Can you talk about the NLP a bit? How does the NLP work into that?
Sure. So for instance, if we when you scrap data of a fund, so you scrap it from various data source, you make sure that the data sources you use are good, and then you go into the process of checking the data. One of the process of checking the data is being able to know if the fund A that you just scrapped is an equity fund, a bond fund. With what is the strategy run behind? Is it a financial strategy which is called growth, like for industries such as technology, like Uber and those type of companies are growth companies in a way. So you got growth funds, you determine the strategy behind, and then you determine is what we call a peer group. So what are the other fund compared to this one? And LLP is used there to be able to digest the legal documents of the fund and determine which type of fund is it. Is it an equity? Is it a fixed income? Is it, as mentioned, a growth strategy? Who's the, let's say, the different layers of strategy we want behind? And it's the first indicator to be able to qualify the data we just grab off a fund.
Right, okay. So NLP, natural language processing, it just scrapes legal document and understands what is it that it's reading. So the second one you said is big data.
Yeah. So as mentioned, this is purely technological again. We collect a lot of data, and we process a lot of data. So to be able to give back the data to the clients in a very speedy way, if I may express myself this way, you need to be able to bring on technology features that allows this. One of the technology we use is instead of using classic database, we use a database such as Redis, which gives us the possibility to stock data points at a certain parts of the technology platform and give it back very quickly to the clients. Technologically speaking, it's like using a RAM memory stick instead of going into a specific hardware memory. So by using Redis and other type of big data technologies, being able to address large amount of data very quickly to the end user, given data visualization, but also data calculations.
Is there anything else on top of? So you said number one NLP, and then there's big data.
It's not a question of what we use the most. It's more the question of the process that how we collect data and use it and calculate them. So next part is big data, as mentioned, and then we use as well AI on all the scenario analysis we mentioned behind. So the algorithms behind this, especially on the use case where we're going to project performance of a fund in the event that he never went through, is done by an AI process where we're able to learn from the past of the different market events we have analyzed versus the funds we want to project in those market events. And here we use AI to make sure that every day the algos is more accurate, and we provide a very, let's say, top of the line technology and result for our clients.
Okay, that's amazing. Your typical client is a multi-million or multi-billion-dollar investment firm. Is that the term?
Yeah. It's well, to be a bit broader, it's investment firms. Could be large clients, but could also be smaller clients. We have clients which are much smaller into the European space, which we are addressing. It's also insurance companies who invest on their own accounts within markets. It's also private banks, IFAs on the French part of IFAs. I think in the US and Canada it's called IRA, so
Okay, yeah.
independent regulated advisors. So there's a vast range of users. Of course, the functionalities we distribute to a very high-end investor isn't the one that we distribute to, let's say, more less savvy investor. But the specter of our industry is very large. Because what we address as a product, so the mutual fund business, covers the whole value chain of the investment platform or
Okay.
investment industry.
Okay, that makes sense. So basically, just to give an example for the people listening, because I really want them to get a really solid understanding of what this is about, because this is really interesting, and this is like this. It's good to know about those things. So, for example, I have an investment account with RBC in Canada, which stands for Royal Bank of Canada. And I have a tax-free investment account, and RBC just invests for me. They have either an algorithm or they have advisors behind there, and they're investing in the market, trying to get me the results that I want, basically. So what they would do, you'd have people at RBC using your platform, InvestBoard, and looking at the different projections and data points and try to understand what would be the best strategic move they should do with my portfolio to, number one, keep my portfolio growing, or number two, in the situation of an economic recession, let's say inflation, where they would switch my portfolio in a way where I would lose the least money. Is that right?
Yeah, totally. And as to go a bit beyond this, they can use it as for you on your behalf. So you have
Yeah.
dedicated to delegate your wealth to RBC, and so RBC makes the decision for you in a way. But you're also in the case that you could ask LBC to be your advisor, and so they will do all those calculations you just mentioned. But instead of doing themselves the let's say final decision, they will propose you the both solutions on saying, well, if we think the market is bullish, then this is what you should do. If we think the market is bearish, this is what you should do. And you have all the information at your level with a very much intuitive scenario analysis to make your own decision. So this is where we go beyond just helping the big names of the industry, but also helping the end clients and the end, because we help his bank to be able to better explain to you what are the consequences of this or that scenario.
You know, Simon, that's what I really love about technology. Technology really makes life more efficient in a way. You know, if a decade ago, the same analyst or the same financial advisor would have probably had to go and do his or her own research on the internet, or would have had to consult someone else who that person would have had to go and personally scrape the data, go on Yahoo Finance and try to make sense. But now, because of technology, you literally have an algorithm people that's giving people guidance in a sense. So you really are heading in a way. Technology does a great job at removing friction. Everywhere there's friction, technology. Look at Uber, how they removed the friction in the taxi industry, for example. To switch gears a bit, and to end things off, I'd like your thoughts on all the craziness that's been happening in the market in the last year. I'm sure your clients are kind of going crazy with the the stock market increasing, Bitcoin, GameStop, Tesla, and then now, and the inflation, and there's just so much happening. So, as someone who's like in the technical side of the space, what are your thoughts there?
Yeah, well, it's of course it's very, as we call it, a very swingy year. There's been lots of ups, lots of downs, and we it's difficult to position yourself as an investor. Like I wouldn't like to be in their shoes, to be honest,
Mm.
because COVID crisis has been very hard on everyone, especially in the markets. And I'm not only talking market. Of course, it's a disaster for a lot of people, and market is just one part of what this overall crisis is in the end. But we to focus on this has been very stressful for a lot of people in terms of markets, and position themselves in this economy is not easy at all. Um, Beside that, the monetary system and central banking industry went full arm and be able to rescue the economy by pushing more and more dollars for the US or euro for Europe, or Canadian dollars for Canada, and those has created lots of let's say investment capabilities to the
Mm.
overall population, and so possibly the risk is inflation. So as within someone within the industry, but more on the technological side of the industry now, um, the question is how you can be able to create your vision as an economist, as an investor, and be able to test this vision on any given scenario you want to use. Uh, it's someone who sells you the future, like a crystal ball, is probably either crazy or either lying. So the question is, you can't be sure at 100% that you're right, but the question is, if I'm right, what are the consequences? If I'm wrong, what are the consequences? So it's about
Right.
giving a sense of what you see in the market and what you want to see in the future. Given specific names, as you mentioned, the GameStop saga or Tesla,
Mhm.
this is very much different for me. It's more and more, pretty much more speculative business. There's a lot of speculation around electrical vehicle, especially in the US, and I think Tesla is very well positioned to play this new segment of the auto economy, which is huge in North America. We don't see as much trend in Europe as of today, but we will probably. And so I understand clearly why Tesla is playing this play and why it's coming up so well into the market. And Elon Musk helps a lot, of course, because
Mhm.
his soft power position is very impressive in the overall, society now.
Mhm.
Given GameStop is quite interesting. At the beginning, it's purely a very speculative deal from either side, right? From the hedge fund guys who were very short, to the Reddit guys who were
Mm.
squeezing the short of the hedge fund. So it's very interesting to see. It's very let's say also new for this industry, because usually you had the big guys such as hedge fund manager, banks, large investment firms, so on and so forth, and you had the little guys like you and me just doing a bit of investing in funds or equities. Now you have the power of networking, power of social media. Looks like there's a game.
Mhm.
People are about to be able to facing those large investors that in the end were not at all let's say, not aware, but they were not afraid of, let's say, mass, the retail investors. Now it has changed. From my point of view, I'm not a specialist of GameStop, I'm not a specialist of Tesla, but just from outside and reading articles, there's a question of what are the, let's say, the real drivers for both sides of the system to be able to pump up or drop stocks very rapidly. And sometimes I see it more as a speculative game than as a long-term investment game, as we talked before, as COVID, as inflation, which will drive the market for a couple of years. But with any market cycle, there's always stories such as GameStop. There's always stories such as
Mm.
Tesla. It's just a question of investing in human behavior regarding money and investment that allows those type of stock to pump or to dump. The question is because now there's more and more people in the market thanks to social media and companies such as Robinhood or companies such as Well Simple in Canada, then it makes more noise. A couple of years ago, it was only people in hedge funds and investment firms that were speaking about those type of trades. Now everyone is speaking about it because everyone is into the stock market. So it's a big trend and it's a big change in the industry and the society overall as well.
That's a really good point. That's a really good point you brought up. So last question, and I think here I'm not really gonna ask you to predict the market because that's kind of impossible. But let's say you were opening your InvestBoard, and with the current circumstances we're in, where we have governments pumping trillions of dollars in the market, and the risk of hyperinflation, what, according to InvestBoard, according to all the data you've been aggregating in the last few months, what are some of the recommendations that you would give to investors? And of course, those are all statistics. There's nothing set in stone, and we're not predicting the future here. But like like for example, is would the platform tell you to invest in tech stocks or, for example, oil stocks? For example, what is the what does it say?
It's not a invest device, but I can play the game, of course. So in general, when you have hyperinflation, what works pretty well is commodities. And the commodities uh, could be metal, or could be food, or could be gold as well. So, what's the biggest threat when the overall inflation goes up is not being able to buy the goods that you need to buy because your monetary system and the value of money isn't as big as it was. Sorry. So, historically, when there's a hyperinflation, people buy gold.
Mm.
That's the short answer. People buy commodities because the inflation of price and commodity goes into your pockets as an investor. There's not an interesting trend as of today, and I'm not invested in it, so I can speak about it without any, let's say, any conflict of interest.
Right.
But Bitcoin is one of the subject that's playing this inflationary business. Being able to buy an asset which isn't linked to a central bank, that can't be produce more than a certain amount of sum, well, goes into the gold standards in a way. So gold is the same thing. It's hard to find. It's hard to exchange, and so on and so forth. And Bitcoin isn't. Bitcoin is, well, it's easy to change. It's not easy to find because the resolving the hash equation isn't easy as of today. But so it's understandable from my point of view, even so I'm not an investor in Bitcoin, that people turn to this new type of investment product to play this inflation part of the economy. What is different from gold to Bitcoin is the volatility behind. Like as we saw, Bitcoin goes very high quickly and goes down as well very quickly. As gold doesn't have those much of volatility in the system. So if I want to do a prediction, if we think that hyperinflation is really much the risk that we will be facing in a couple of years, I suggest people to go to bonds. No, not to bonds. Sorry, to gold, or maybe other type of digital asset that could predict or looks like a gold features in the end.
Awesome. Simon, where would you like to direct people if they want to learn more about you or learn more about InvestBoard?
Sure. Well, for me, you can send me an email, and I will give you it so you can put it in the comments of the podcast, or you can reach me to LinkedIn. For learn about the company, there's a LinkedIn page which is always updated, and of course our website. It's the best way to learn about us.
Awesome. I'll put
And
all the
of course, if
links.
people are interested, yeah, if people are interested, we're happy to discuss and give more details in terms of technology or in terms of the use cases we're addressing for our clients.
Perfect. All the links are going to be in the description. Simon, thank you for being on the podcast.
Oh, thank you for having me. It was a pleasure, Leon.